Um, Thanks everybody for joining today. My name is Geoff Bruskin. I'm the managing partner of White Tiger Connections. We do mostly mergers and acquisitions and recruiting for public accounting firms across the United States. A lot of our work is with small firms between 100,000 and 15 million or so in top line revenue, and we help them buy and sell companies, and we also help them with recruiting. Very pleased to introduce David Auer, who in a short period of time has become a friend of mine, as well as a business partner and colleague. And in many years, well, I guess not too many, 5 years or so of talking with accountants all day, every day, David stands out for a lot of different reasons. But just to go over a few of them, and then I'll turn it over to him to introduce himself and anything else he'd like to say. David's firm is extremely impressive to me for a few reasons. The first is the structure of his firm is orders of magnitude more advanced than anything else that I have seen in the market. The second is the vehicles that he employs for his clients in a tax savings capacity as well as in others, but most of it comes down to tax at the pinnacle. Are more advanced than anything that I have seen in the market. And this is after quite a few conversations. And the third is just he's a really great guy. And I think the third is probably the most important. So pleased to introduce you, David. And if you'd like to say anything by way of introduction here, feel free.
Great. Thanks, Geoff. So yeah, nice to meet everyone. Also, I want to introduce Todd Hudgens on the call. Actually, I forwarded him my link, so it shows up with my name on it. Todd, if you go in the upper right-hand corner of your screen there, you can rename yourself. So
welcome, Todd.
Yes, Todd. So Todd and I have been working together for about 25 years. So Todd is a estate and trust and business transaction attorney, top-notch background, and so we've recently brought in to our suite of services, his specialty, so that we can now provide a more holistic model or a service blend to our client base. But Geoff, do you want me to talk a little bit about our process and kind of what our services are, or do you want to go a different direction initially?
I think I'll go a different direction initially, because I think most of this does come down to your process and your services uniquely, David. But I think just by way of introduction, so the purpose of this webinar, and I think we're going to be doing a series of these webinars, hopefully every Friday into the horizon line, is to introduce all of you on this call to a joint venture that David and I are creating with Todd's help as well, around white labeling CPA services to RIAs. And so I'm just going to give a little bit of an overview as to this program that we've designed. I'm going to go slow here because it's mostly for my benefit, not for yours. I have some notes here, but it's something I'm really excited about. And if I go too fast, I know I'm going to go too fast, so I'm going to go slow on purpose. So RIAs need two things. The first thing is you all need more clients. And the second thing is you need a competent CPA firm that's responsive and professional and has the capacity to serve your clients. And we think that we have the answer to both. And that answer is that we essentially build a CPA firm inside of your RIA. And what that means is you quarterback, and under your brand, we can provide 5 distinct verticals. And these are the verticals that David has built very successfully, and now with Todd's help, inside of his CPA firm. And those 5 verticals are tax advisory and compliance at the very highest level, accounting services, number 2, including fractional CFO, controllership, bookkeeping, payroll, AR, and AP. Number 3 is trust and estate services, both the creation and the maintenance of T&E. Number 4 is asset protection. And number 5 is financial coaching. And we can go into more of these. David is certainly the best person to do that in detail. But essentially, we provide these services under your brand as a fully white labeled solution. And we have the capacity to support all of your clients with these solutions. And we have a process for establishing the connective tissue between your advisors and our front office subject matter experts in each of these unique disciplines. Our front office vertical leaders will integrate and collaborate with your advisors to serve their clients, meaning your advisors' clients, anytime that one of our solutions is required by your quarterback, your advisor. And our job is to make your advisor look very, very good. So I think you can see it's pretty clear how we're solving problem number two, which is the competent CPA firm that's responsive and professional and has the capacity to serve your clients. But you're probably asking yourself how we're planning to solve number one, which is getting additional clients, probably the number one thing that you all think about. And in order to talk about how we're solving that problem, we need to talk a little bit about the accounting profession that I've been living in very intimately now for the past 5 years. Now, every wealth manager in this country, I believe, understands that the golden goose would be to partner with a CPA firm where you can market to their captive pool of clients your financial services. And as a result of the CPA, this hypothetical CPA's evangelism for what you provide, it's a feeding factory. You guys have the ability to provide tremendous value and tremendous talent, which is really needed. And the cooperative effort between a CPA who's invested and yourself, you can provide exponential value to the client. The problem that every wealth advisor understands, at least anyone who's been living in this world for a long time, is that CPAs generally have absolutely no foresight and they have very little entrepreneurialism when it comes to supporting their clients or their own business model, let alone yours or thinking outside the box. And as a result of this, small and medium-sized CPA firms are dying. And they're either being gobbled up by the bigger companies, and I see this every day in an M&A capacity, or they're turning off the lights. So kind of our thesis statement, and again, this is, I can't say this enough, very much anecdotal evidence based from what I've seen in the market now for 5 years, is as shiny of an object as this partnership opportunity between wealth managers and CPAs may be, it's not a realistic and scalable strategy. If you've been successful in developing one or two partnerships with a CPA firm, I applaud you. There are some RIAs I know who have built 100 partnerships with a CPA firm, and it's great. But it continues to be the next frontier to think about more partnerships, more industry saturation. And it's very, very hard to do. And it really takes a vested interest by the CPA, which is hard because the profession has a challenge with this kind of mindset. It's really not what they're naturally, how they're built, if you will. So because we brand our solution inside of your firm as you can now market and position yourself as a platform financial services company where clients will walk in your door because they need one of our 5 vertical solutions. And the captive customer is built inside of your company. Now, what makes this even more attractive is that all of the small and medium firms, the CPA firms, small and medium-sized CPA firms that are dying or being eaten, their customers have to go somewhere. So the opportunity to build a base has never been better than it is now. Now, we can talk a lot more about that, a lot more about kind of what private equity is doing with the accounting profession and why it's creating a lot of froth and why clients are being shed from CPA firms because they're not getting great experiences. We can talk about the talent crisis in the accounting profession and how that's contributing to an increase of demand for just the consumers, high net worth individuals, business owners, every population to get these distinct CPA services that our joint venture requires. But we're going to save some of that for a different day. And just very briefly in closing here, I want to tell you a little bit about the kind of the financial benefits of this white label solution for you. So in addition to the white label solution being built inside of your company, being under your brand and supporting your global brand that you carry, we will give you a referral fee that will go straight to your bottom line for all of the for every dollar of service which we bring in. We'll give you a referral fee in the immediate for that business that we serve. And the most attractive part about this of all, which David and I are very excited about, is that we will share the enterprise value of this revenue that is generated with you. So when it comes time for you to have a liquidity event, not only are you going to receive a higher multiple for your core business because you now have the ability to serve that business with expanded functions, expanded and reliable functions, but you now also have the additional enterprise value in a piece of ownership from this combined business that we're building inside of your brand. So the specifics of that we'll get into on a case-by-case basis. If you guys are interested in learning more, who are on this call or listening to this recording. But I think that paints kind of an overview of what we're providing. So without any further ado, David, I'm going to turn it over to you. And I think it'd be a great time either if you'd like to add any color to what I've shared, or if you'd like to go into talking about the services more in depth, wherever you like to take this.
Great, thank you. So let me just jump in just so that everyone kind of has a tangible picture of how we work. So we're different than most other CPA firms that you may have come across. And how that what I mean by that is we start every new client engagement with a tax planning engagement. We call that a strategic blueprint, but it gives us an opportunity to understand a client a little bit in more detail than by just looking at their prior year tax returns and assuming that responsibility moving forward. We will gather additional information about where the client sees themselves going over the next 3 to 5 years. And I use the analogy that, rather than look through the rearview mirror of where they've been, which is what most accountants do by just putting their right numbers on the right line on a form and doing that over and over again for 10 and a half months every year. We take a different position on the front end of that relationship and look through the windshield of where they're going, so that we can anticipate what potential tax saving strategies they could be able to take advantage of. So anyway, it's a very different approach. We start with a strategic blueprint. We then, assuming the client moves forward, we have a fairly extensive onboarding process where we're getting them introduced to the right team members, and then putting in place those tax strategies. And then probably the cornerstone of our ongoing service is that the second half of the year is when we pivot from tax compliance to doing year-end tax planning. So every client starts down this path where we're gathering information, and we update whatever we've got, whatever's changed from the prior year, whatever may have changed under the tax law, and then we're updating the tax strategies and trying to precisely predict what their tax liability is going to be, and then everything we can do to try to reduce that liability. Having tracked over hundreds of clients that we've brought on board in the last several years, having tracked the actual tax savings, we're able to reduce their tax liability on average about 55% of what they would otherwise have to pay in income tax. So it's a quite substantial amount. The average taxable income for our clients hovers right around $720,000 a year. So these are generally going to be people that are in the higher tax bracket that we're able to make that significant improvement. And matter of fact, just as a side note, generally the more taxable income someone generally has, the more tax savings, not the less tax savings that we can generally accomplish for them. So it has a positive correlation. The higher the income, generally the higher the percentage of tax savings, and obviously that results in a higher dollar amount of tax savings. All of that goes right back into the client's pocket, obviously, as money that they now are not having to spend, which then as a wealth advisor, you have more assets then to manage for them. And it allows them to achieve, getting to their financial end zone a lot quicker, having been able to not have to pay those taxes unnecessarily. So that's basically been our process. It's pretty simple, straightforward, but it's a relationship model. So we have at least 6 interactions with the client each year. Sometimes it's more, depending on their level of need. What we've done that also is very unique is that we have what we call a subscription model. So it very much mirrors an asset under management model. So what we've identified is really 3 core areas of competency that we can take care of our clients. So the first, obviously, as Geoff mentioned, is the tax coaching and compliance piece. Each blueprint has a customized list of strategies for that client, and then the client picks and chooses which ones they want to implement. We'll help them implement those and then maintain those over a period over time. But it's a month-to-month relationship with our clients. We feel confident that once we show them the tax savings year after year, that it's a high probability the client's going to continue to stay with us. And again, just because we feel like that's a unique service that's not being offered out there in other CPA firms. Then going around, obviously very important. I'd say about 90% of the clients that we bring into the firm have not updated their estate planning documents, and they need to get their house in order. So that's one of the other core competencies that we have. Todd will come in and assess their what they need, and then to the extent that it's a business owner or a professional such as a physician, generally they're also going to be a candidate for some level of asset protection planning, and that could go all the way from creating an irrevocable trust to an additional entity. There's about 12 states out there that have what we call they're called COPE, but it's a charging order protection entity is what the acronym means, that also has the ability to create a series LLC, which is a relatively new feature, but that usually starts as the first building block for someone interested in asset protection planning. And then it could go all the way through the other spectrum of where we have an offshore trust and or business entity for those who are on the extreme end of being risk averse. We live in a litigious society, so asset protection planning for wealthy clients is increasingly becoming more and more important. So that's an area that we feel like is very much needed by the clients that we serve. And then the last, which is not necessarily the one that puts more dollars in our client's pocket, but it's a necessary evil of having your financial life in order, knowing where your business is headed, and that is having a good set of accounting and bookkeeping records. So we have an accounting and bookkeeping team that can fulfill on that. When I mentioned earlier that we have somewhat of a subscription model, we have packaged each of our levels of services into three levels. So we have generally what we call a basic program. So in the tax coaching and compliance area, that is just us taking care of tax returns. Now, quite frankly, after they go through a blueprint, we have never had a single client choose just having us do their tax return because they just saw how much tax they could save if they engaged us in tax planning. So about 90% of our clients then will start in Select, and then those clients that generally have more than $1 million of taxable income, they become candidates for additional or more advanced income tax planning strategies that we can draw upon. And so those clients will move into what we call our premium level. Similarly speaking, on the estate and asset protection side, we have all the way from someone who just needs a simple will and some ancillary documents, which there's not very many clients that have high income that should have a will only. So as a result of that, most everyone will move into the Select, where they'll have a revocable trust based estate plan. That will help them make sure that that everything that they have at the end of their lifetime or on disability is managed properly and passes on to the next intended heirs, the family members. And then we have those clients, like I mentioned earlier, that are very interested in the asset protection, extra planning, as well as coming up with the sunset that we have here at the end of 2025 with the estate tax exemption going back down. Now looking at other ways of making sure that their estate is in such a condition that they don't have to pay any unnecessary estate tax. So we have three levels in the estate and asset protection arena, and then the accounting and bookkeeping arena. We have the same three levels. Basic is us just coming in and cleaning up their financials on a periodic basis. The Select is a quarterly engagement where we're staying on top of everything in their business on a quarterly reporting system. And then the premium is our clients that need more frequent accounting, which is generally going to be monthly. So those are our three levels of services and how we've set up the subscription model. It's very predictable. We don't bill by the hour. We build in the meetings and the relationship side that we need to be able to provide those services. I like to, when we generally start or talking to a business owner, we like to show them what we call the trifecta of tax, estate, and asset protection. So for most of our business clients, they have their source of ordinary income primarily from their business, and then we also have all the assets that they're going to be building during their lifetime over on the right. And then, like I mentioned earlier, for most of our clients, the foundation, the cornerstone of their estate plan is going to be based on a fully funded revocable living trust. When we look at that as it's built out over time, this trifecta starts filling in the blanks where you have this operating business with various tax planning strategies that will put in place over time. Anything that's going to accumulate wealth or net worth, we're generally going to try to put those over into a protected environment on the right. So you can see a couple of the different strategies that an example of a client might have. We also use the stoplight approach with the retirement plans, just because not all retirement plans are made equally. So you have some that are, have tax-free versus tax-deferred benefits down the road, and others that are tax-deductible versus after-tax on the front end. So anyway, we draw this trifecta out and fill it in with whatever that particular client needs or will need in the future, just to give them a visual or a graphic overview of what their plan looks like. So anyway, that's a little bit about our service offerings, the process, how we work, and then at the end of the day, we try to present this information to our clients with the idea that it requires quite a bit of hand-holding and education over time. So we build that into our services, where we are constantly educating the client, finding out more about their goals and needs, and then being able to design strategies around it that at the end of the day is going to create significant amount of wealth that goes back to them.
David, I want to turn it over to Todd if you and he would like him to say anything, I'm sure, and I certainly would like to. But before I do that, one question that we have from our guest is, can you talk more about advanced tax planning strategies for $1 million plus? What types of strategies are available, especially for W-2 in general? And specifically, he's asking about W-2 physicians, which I know you know a lot about.
So we have an increasing number of our physician clients that have W-2 jobs as their day job, and then they and I think that as an industry they're becoming more intelligent with the various readings that they have about the need to have side businesses or a side whether it's locums work or perhaps start becoming more actively invested in real estate or other venture capital businesses. So any one of those usually creates then a starting point for us to be able to do tax planning. Those who don't have any of those type of opportunities, we can still help with identifying various tax incentived investments out there that whether that's an oil and gas investment or could be on another type of investment like a charitable strategy or something like that. So it obviously pure W-2s, their hands unfortunately are tied somewhat on the menu of different strategies that are out there. But there's several that we've come across that generally a pure W-2 client would still be a candidate for. On the more advanced strategies, there's not necessarily a laundry list that we go through other than just identifying what the core business is that the client has, and then trying to identify some things that may be able to help them either immediately or down the road in saving tax. So having over on the right, you see an example of a couple of them. But for example, one may be to create their own insurance company. Those are typically called captive insurance companies. We have one because not all of our clients meet the income requirement to have their own captive. What we've created for our clients is what we call a mutual reinsurance company, which allows them to participate even if their revenue themselves is not significant enough to have their own captive insurance. We're also fans of having those type of entities, owned by some kind of a self-directed Roth IRA or 401k plan. The idea there being is that you allow there to be tax deductible contributions made in the form of premiums to that reinsurance company, and then at the end of the day, when that money comes out to their Roth and then ultimately to themselves, assuming they're over age 59 and a half, that money comes out tax-free. So there's not very many tax unicorns out there, that where you get a tax deduction for something going in and tax-free completely when it comes out, but this is one of them. And so for the most part, most of our business owner clients, this is one of their favorite strategies for the most part. Also having a variety of perhaps other types of entities, one being an administrative service company that would allow the client to pull out certain tax-free fringe benefits. There's about 12 of them in all that C corporations can provide to their owner employees that S corporations can't. So that having the C corporation in conjunction with an S corporation usually allows them to take advantage of those fringe benefits. It also gives them another vehicle through which they can accumulate wealth outside of a retirement plan, or in the reinsurance case. So because our current corporate federal rate is at 21%, and I was just reading this morning that it may go down to 15% depending on who's elected this fall. But what that does is it creates an arbitrage between the client's high marginal bracket that they otherwise would pay on S corporation income, that then, for example, would go into an after-tax savings account, versus pushing that over to the administrative service company, or in this case, a C corporation, where that you lower that tax liability down to that federal rate of 21%, and then that entity then becomes a bank where the money can be used either for investments or lending in other areas. And then depending on what type of industry and what the size of that client is, generally, if they're a professional service entity, they're not going to qualify for what is called Section 1202 capital gain exclusion, which is currently at $10 million. But having perhaps an intellectual property leasing company that licensed the intellectual property back to that S corporation, that IP leasing company now would qualify for the Section 1202 capital gain exclusion. So that's just an example of a couple of those strategies. Most of those or all of them are increasingly more attractive as a client's taxable income goes above $1 million.
Thank you so much, and we got an emphatic nice from our participants. So thank you for that, David. Todd, did you want to maybe introduce yourself and share anything at all, please?
Sure. Well, thanks, Geoff, and thanks, David, for having me on and let me join you guys today. But I think it's just exciting. I think the model that you guys have created is super exciting. And, to be able to add estate and asset protection planning to the tax planning and tax coaching and bookkeeping services that David's firm's already providing is just a great add-on, in my opinion. And, so many people don't do this, and it's a shame. They don't engage in the tax planning. They don't engage in the estate planning or the asset protection planning. And so we've tried to come up with a process with David and his firm that really make this both cost effective and efficient. And we've tried to uncomplicate it too. I think so many times people think it's so complicated that they kind of just throw their hands up and decide, well, I'm not going to do that. But we've tried to make it where it's reasonably priced and where it's something that all clients can get put in place. And as you guys both know, the problem is you need to do this before it's too late, right? Because there comes a point in time when it is too late, and that point in time can be when you get sued. So after you get sued, now we can't go set up your asset protection plan, at least not to protect you from that lawsuit. And then people die, right? They get hit by the bus. They come up with some type of illness, and now we can't even do your estate planning. So it becomes a real mess if you don't engage in these type of services early and take advantage of that. And so it's just neat that David's firm offers this type of service to all of his clients. And I think it's really, really exciting that RIAs could now bolt on these services to what they already offer their clients, because it makes them so much more sticky, if you will. I mean, so I think having an RIA that can offer all these services to their clients would be huge.
I really appreciate that. Todd, thank you. I think, you know, in my mind, this is a really nice confluence of, there's defensive strategies that we're talking about here um, between asset protection and, the you know, wills and trusts and estates, and there's offensive strategies with the tax planning and accounting services and vehicle creation, in an entity capacity, you know, especially when we're working with W-2s or with business owners. You know, there's a tremendous amount, and I say this, you know, as benevolently as I can, of incompetency in the CPA profession, where there's a lot of CPAs who are very tax compliance and backward looking, and far fewer who are tax planning and forward looking. And among the forward looking CPAs that I have encountered, David is head and shoulders above the rest. And the more that you guys hear, I think the more impressed that you'll be. David, anything else from kind of like a modular perspective that you want to go into with the kind of design and creation of our white label program here?
Well, a couple of things come to mind. One is how do we roll these services out to a wealth advisor's client base or prospect base? And what Todd and I have done very successfully is put on a series of personalized webinars, mostly with me in talking about what are some of the tax strategies that that a client base could take advantage of. And then Todd talking about the estate and asset protection planning and what's coming down the pike in terms of some changes in the tax laws. And then joint venturing that with an advisor where they would also then be able to to drip on those clients in a webinar talking about the importance of risk mitigation and investment planning, especially in these times where we're reaching all-time highs, and how good diversification and being not just putting money into an index fund may be the best answer. So anyway, that's one way that we've seen that works to accelerate getting this out to market inside of a firm or a wealth management firm. The other is one of the components in our processes that's not in the diagram that I shared earlier is that we have an annual financial strategy session where the entire team of advisors comes together to brainstorm on what a particular client could benefit from, and then letting the wealth advisor be the quarterback on making sure things get done. When we have an opportunity to interface with the clients, we serve as a very effective third party credible source to reinforce the recommendations, whether they're in the insurance area or the financial planning or investment management. Not all clients have all of their money invested with one advisor. So generally, when we can shed the light on that other advisor that's at that table, it generally will allow, if not for more stickiness in the client relationship, like Todd mentioned, potentially more assets under management when those recommendations are being reinforced by the other advisors around the table. And I know from experience that most accountants aren't good at doing that. We tend to jokingly call them Dr. Knows, because they're if they don't know the answer to something, even though the answer could be yes, they have a habit of saying no just because they don't know how to go find the answer. So unfortunately, that often happens when a good financial advisor is making recommendations to a client, and the client asks their accountant what they think, and if and sometimes that answer comes back as a no, or the recommendation gets sabotaged. Whereas that's not the way we work.
I love it. Something else that I'd like to mention, and I want to try to avoid getting too deep into the mechanics of rolling this out inside of your RIA, your wealth management firm, but just a little bit about the difference of, and my admiration for the process that David built, and with Todd's collaboration in his own firm, and the model of how we deploy this inside of RIAs and wealth management firms is modularly equivalent to how David built it out very successfully inside of his firm. So the model is it's essentially a customer there's an emphasis on customer service, maybe as much, if not more, than on the emphasis of any other aspect to that. And I think that that's demonstrated in that the first line of defense, so who the quarterback passes the ball to, whether it's on a run play or a pass play, if you will, is that customer service lead. And the customer service lead essentially serves as a scoping and a deployment partner to be able to then pass the ball off to someone that we call a blueprint advisor. And the blueprint advisor is maybe the person who you think about as kind of the partner, if we take the equivalent model in the CPA profession. And that blueprint advisor will work with the customer service person's assistance to then deploy all of the various solutions that we offer, be them asset protection, financial coaching, obviously tax planning, accounting, and trust and estate related work, to the subject matter expert on our team who kind of leads each of those distinct verticals. So the process goes customer service person to blueprint advisor, back to customer service person, who then deploys and dispatches and monitors and works closely between the client and the third party, which is the vertical leader, be that in a tax capacity, an asset protection capacity, et cetera. So this model that David has developed is really essential, because the biggest complaint that I hear about navigating the CPA profession is that CPA firms are unorganized. CPA firms do not have timely responses. Things will get buried in inboxes. You'll have to make requests numerous times. Clients will need information and not be able to get it in a timely manner. And this is far more of a proactive approach, where in assistance with your wealth advisor, our customer service person is going to work really closely, be the go-between, almost in an administrative assistant capacity, but a really highly educated one who can be the go-between your wealth advisor and our blueprint architect and deployment, and deploy it to the vertical leaders accordingly. That's something that I have never seen in the market done in such a sophisticated way. And it's a major reason why I'm so excited about this partnership with David. Todd or David, anything else before we kind of open it up to questions here?
No, I think we're ready for any kind of questions that may come in.
Great. Participants, if you have questions, please feel free to ask. And we're about ready to wrap up. So we have 20 minutes here. So please feel free.
And Geoff, you may talk about maybe next steps. If somebody'd reach out to schedule a call with, maybe they reach out to you, and then we can just get a common calendar invite where everybody could join, and we could walk through, anybody's particular questions or what their situation may be that we could help.
That's a really great point. So as far as deployment is concerned, we take each of our deployment use cases on a case-by-case basis. There's unique aspects. I think something that makes us hopefully even a little more unique is that rather than necessarily need you to ascribe to everything the way that we do things, the way that we do, our process, we really like to get in and kind of plug our systems into the way that your company works, because what we know is that all RIAs are unique. And part of the function of this customer service layer, which is that first line of defense, is that it really gives us the opportunity to work with your unique system and what your clients' cadences and expectations of communications are. And David mentioned the webinars and some of the educational aspects of it. So we can share more about all of that with you in our sales process, if you will, as we get to know each other better. So we'll definitely get a scheduling link with David and myself for and Todd, you're more than welcome to be a part of that initial call as well, with anybody who's interested in kind of taking this further.
And Geoff, one other point I should have mentioned earlier is that our firm is basically a virtual firm. So we we have clients in 44 states. Our team, we have 5 in our home office, but we've got a team in India, a team in Philippines that work directly for our clients. We don't outsource them through other offshore sourcing firms. And then we also have a team of about 15 professionals that are scattered all over the U.S. that also work remote. So we're in all the time zones. We as a CPA firm, we can handle any state income tax issue, regardless of the state. So that makes it a lot easier for us to be able to help, clients no matter where they're located.
And if I was listening to this call, the next question that I would probably have, is around capacity. And we're in conversation with several private equity and venture capital firms about scaling this up. Another thing that I think makes David's firm so unique is he's the only accountant I know who is intentionally overstaffed. So from a capacity and bandwidth standpoint right now, we have plenty to go around. And it will not be anytime in the near future that we're in need of additional capacity support. But we do have the vehicle. I have a recruiting background. We have these great folks offshore who, as David said, are in-house, and we have the ample ability to scale up this just as fast as is necessary. So we're in a very good position today, I'm happy to say.
Yeah, and we found, because of our impressive growth over the last several years, which has been averaging between 40 and 45% top line, I've made a practice learning it the hard way that you don't want to hire after the fact. You want to hire before the fact, before you need them, especially when you're, especially given the fact that most of these team members are remote and requires a little bit extra training than you would have if everyone is in the same physical location. But we also, because of our unique approach to to the services we have, we think that we need to have anywhere from 3 to 6 months of training before a team member is ready to start doing the things that they do for us.
Just a reminder, please, if you have questions, feel free to drop them in the chat and we'll do our best to answer them. Todd, maybe in the meantime, while we wait for some questions, do you like to share anything else about the T&E work that you do or the collaborative effort that you do with David?
Maybe a couple of things that might be interesting to people are that, we have relationships with estate planning attorneys all over the country. So that's how we're able to utilize, or work with clients in all 50 states. And so that might be interesting. And I think that the estate planning piece, we're open to looking at what clients currently have, and we put that on a flow chart for the clients so they can easily see that in a 1 or 2 page diagram. And then we're able to make our recommendations similar to David, what he does on the tax planning side. After we review what the client currently has in place, we're able to make recommendations on both the estate planning and the asset protection planning fronts.
Really great. David, maybe you'd like to talk a little bit about, one of the things that we're seeing a lot right now, and I know, Todd, you're a deal attorney as well, and with M&A experience. I think a lot of wealth advisors, as well as certainly CPA firms, are seeing all of the companies that are going through an M&A process right now. And I know, David, you have a very unique, almost one-of-a-kind process. I've never heard of anything like it before. Normally what happens to an accountant when a client goes through a merger or an acquisition is the accountant, of course, loses the client. This is 99% of accounting firms, if not more, across the United States. David, would you maybe like to talk a little bit about the value that you provide there?
Yeah, so there's dozens of tax strategies related to the disposition of a business. I think all of us know some of the big ones. If you're in real estate, you've got the 1031, exchanges. You've got the opportunity zone opportunities, but where there a lot of strategies fall short is when there's a sale of a business. And I mentioned one earlier, which was the Section 1202 capital gain exclusion, which only applies to, if you're selling your stock, and if you're a C corporation, it doesn't apply to most other operating business that are selling their assets. So over the last 25 years, we've honed in on a couple of the strategies that have helped mitigate taxes. And it's just a number of different ways to structure it, for a particular client. But what it does involve is what it usually results in, depending on the size or the magnitude of the sale, is it either allows the client to escape, permanently eliminate, not defer, which is how most tax strategies are on a sale. It's you're really just kicking the can down the road. But this permanently eliminates as much as 99% of the capital gain. Allows the client to stay in control of the money. Obviously, there's more money now for the investment advisors to manage. but all of that stays, within one closely managed entity that the client in perpetuity, can stay in control and manage and pass on to their family members. It has also the unique benefit of escaping estate tax and generation skipping tax. So if the estate plan is set up properly, this wealth that from a sale of a business that can avoid 99% of the capital gains tax can now continue on in perpetuity as long as whatever state the client lives in, the trust that they've created generally to own that property, as long as that trust can stay in existence, this wealth will continue to stay intact. But in the meantime, the client manages it. They control it, and they can draw as virtually as much income out of it. And if they want to use it as a family bank to make other outside acquisitions, they can do that as well.
Without giving away the candy store, even though I know you're extremely generous, David, do you maybe want to talk a little bit about the financial component of that for you, and in this model of white labeling, how that would also be advantageous to the RIA?
So the way we've structured it, there's a sliding scale transaction fee on the front end, and we share 20% of that to the referring advisor, and then the ongoing maintenance of that structure starts at 100 basis points and goes and then trails down depending on the size of the assets, and that is also shared in the same percent. So it's basically like an AUM fee, but we're just maintaining the structure that it's intended to try to maintain, and then just be able to help that perpetuate into the future. So it's a potentially a lifetime, if not multi-lifetime referral fee that could be paid.
And you can see how that's value, as I said kind of in my introduction here. Our model is both on the referral fee basis as well as in the enterprise value of what we're developing. So wealth advisors will get the advantage of that both in the immediate as well as you think about the enterprise value of your practice when when you start thinking about a liquidity event.
And I think both there's one other area, Geoff, you mentioned, where a lot of accounting firms see when a client sells their business, that's the end of a client relationship, or at least of the majority of the type of work that was being done. And obviously, this type of strategy, perpetuates that on an ongoing basis, on a win-win, situation. Client wins because they're not paying capital gains tax. The wealth advisor firm, continues to be the quarterback on all the investment decisions made inside the entity. We continue to be able to service that client from a tax and accounting standpoint. But the other piece of that is a lot of times if a wealth advisor is not attracted to go after business clients because other than a retirement account or life insurance or disability insurance, really most of these business owners and real estate investors see that their business and or their real estate is really their core investment. So they stay heavily invested in those assets, which sometimes does not leave a lot of other investable assets for the wealth advisor to capture. Whereas having the ability to be in the front seat when a business sells now puts that wealth advisor in a much better situation to be able to now have a significant amount of those assets to manage.
Awesome. Todd, anything to add to that?
No, I think Dave did a good job. That's I think he covered it pretty well.
Couldn't have said it better myself.
Well, I mean, one thing that we might mention too, and David and Geoff, you both said this, but some of these strategies just give an advisor a lot more money to manage. And I think as a whole, David's process really uncovers for an advisor, and then linking in what we do on the estate and asset protection planning side really helps an advisor uncover additional assets. Because as David mentioned before, a majority of the time, a client doesn't have all of their money with one financial advisor. And so this helps the advisor see where those other pockets of money are And oftentimes we can help that advisor, we can help that client understand the benefit of pulling all of their assets under one advisor's firm. Some clients think that's diversification, that they have 4 different advisors, but I'd like to argue that it's not.
One other topic which I think is really important, and I'm sure that we probably should have mentioned it sooner. Good learning for next time is I imagine that there's kind of a, we mentioned the two things that in the beginning of the call that RIAs look for, the first being more clients and the second being a competent CPA firm that they can partner with. There's a third thing that they don't look for, which is to take any kind of an action that would alienate your primary referral sources. And in the event that you have been successful in developing relationships with CPA firms, which many RIAs have, in no way mean to say that it's an insurmountable task, just that it's a very difficult task when you think about scale. But certainly as an anchoring task that has allowed you to achieve the position that you're in today, and a part of the continuity for the future. I'm sure that you're weighing any kind of action that you could take that might alienate those primary referral sources that you have, be them T&E attorneys, be them CPA firms, et cetera, et cetera. And what I'd like to say, just, I'll speak a little bit specifically to the CPA firm ecosystem, and I can do that because of how in depth I live in that world on a daily basis. I had an RIA engage me a couple of months ago, didn't even care about receiving referrals from CPA firms. It was just kind of so dramatic that 50% of their clients did not have a competent CPA who would respond to their clients' emails when it came to tax and T&E related matters. And so they engaged me not even to find them CPA firms that would refer them business, but simply that they could have CPA firms to refer that business to that would take care of their clients. Didn't want any kind of referral fee, no kind of financial benefit to them, except that it could help them serve their clients better. And the problem has kind of become that endemic in the profession. And I think that that really is a good representation of what I see. And I would imagine many of the RIAs who are watching or listening to this are seeing as well, which is that there are simply not enough CPA firms, certainly not enough competent ones. And so what I would say is, to the extent that you have a good and true and authentic relationship with the CPA firms in your network, surely they appreciate the highest caliber of referral that you're able to give to them. And this would, if you scale with us, be a mechanism for kind of feeding yourself that business as opposed to feeding it to them. I would argue that you will probably continue to have a relationship with that firm even after building such a solution as ours inside of your company, because really when you have a competent advisor, for the CPA world especially, it's less about money. And that's part of the problem that's actually that we're solving now through introducing this solution, is CPAs generally don't think about their business model. There are exceptions to the rule, but most of them do not think about this business model in a way which is about building scale and providing more exponential value to their clients. They think very kind of vertically, very with tunnel vision about the solution that they provide. And if more CPAs would only have that peripheral vision and entrepreneurialism, it would never be necessary for us to build this kind of a solution. So I think that as far as the cost to the benefit analysis, I think there's a far greater benefit for you and for your clients and for the future of your firm and your P&L and your enterprise value to seriously consider this as an outcome than in more of the pessimistic approach of, is this going to cause damage to my relationship with these referral partners? Maybe it'll even serve as an opportunity to bring them even closer into the fold. Maybe there are acquisitions that are possible that you can do. I think it really puts the RIA in a position of power and control. And frankly, you deserve that, because if the CPA firms had the appetite to do more of this, I think we would see accounting ballooning as the profession of the future. Whereas really, I think it's the RIAs who are more positioned to kind of own the financial services space. That's my personal opinion. David or Todd, I don't know if you have any commentary on that.
Well, I think what I've seen in our profession over the last 20 years is, there's not enough incoming people that go through the rigorous CPA exam. Quite frankly, the compensation levels for people who pass the CPA exams probably not been high enough to attract the smartest, enough of the smartest people. So right now, I think last estimate I saw was over half of the current CPA profession will be retired or out of the profession within the next 10 years. And there is not enough new candidates coming in to replace them. So we will start seeing a increasingly limited supply of CPAs. It doesn't get solved like it does in a lot of other industries by bringing in people from other countries to fill that demand. There are some, there is an attempt to to hopefully build on everything that artificial intelligence can provide to leverage everyone's time, but as of right now, it's just a shrinking supply. But the demand is still just as high as it ever has been.
Geoff, David, the only thing I'd add is that I would agree with you, Geoff, that financial advisors are kind of in a prime position to rule this market, and it's mostly because CPAs, as a general rule, don't meet with their clients. They meet with their clients to sign tax returns, and probably the biggest complaint I've heard in my career is, hey, I called my CPA, I told them we want to do some tax planning, and we don't do any tax planning. And so, I think David's model, meeting with clients up to 6 times in a year, and a financial advisor being able to bolt that on to his or her practice is, I mean, that's a huge benefit.
Awesome. Well, we're right about at time here, and we didn't get too many questions. I wish we did, but that's okay. I won't hold it against you guys. David, Todd, any closing thoughts?
No, I think just welcoming everyone to reach out and schedule a time we can get to know everybody that's on this call and figure out how we can work together.
Yeah, I think the only thing I'd say is I just encourage, the financial advisors out there that are on the call to at least take the step to visit with David and Geoff and see if this couldn't be a valuable asset for your firm.
Thanks so much, David and Todd. And it really appreciate everyone's curiosity in watching or listening to this today. And our value, our hope is to provide value to you and to your clients. And hopefully, we can all be very financially successful together in the process of doing that. And you certainly don't need to be a pauper in order to help people. So thank you for your attendance. If you'd like, please reach out. My email address, which is probably the simplest way to get in touch, is geoff@whitetigerconnections.com. And we'll be sending out the recording to everyone who registered today. And we'll also be doing these webinars on an ongoing basis. So I think this time, pending, if you hear of anything from us differently, 11 a.m. Eastern time, 8 a.m. Pacific time, every Friday, I think will be when we do these informational top of the funnel webinars. So look forward to seeing you guys again in the future. Thanks again, David and Todd.
Thanks, everyone.
Bye all.